Hello everyone, upward momentum continued on the SPY today. We opened up very green, but then obviously towards the end of the day, throughout the day, we were bearish, but we're still holding above 437 on the SPY. So in today's video, we're going to take a look at how much more room there is to the upside, whether it makes more sense to start leaning bearish, bullish, what to do. We're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, the bonds, everything. We're going to put it all together. And we're going to see what the next steps are for the market. All right, so without further ado, let's get started with the video. So before I continue with the video, I want to preface it by explaining that we are currently long on the S&P 500 with calls expiring September 29th, 445 calls on the SPY, and also GameStop $30 calls expiring in January. So I'm bullish on the overall market in the next few days, and there are three main reasons why. All right, so we're gonna go ahead and talk about those reasons right now. Okay, so number one, this is a chart of Nvidia. Nvidia has earnings tomorrow, Wednesday, after hours, and with these large tech stocks, oftentimes prior to earnings being released, there is a large earnings run up, meaning the price of the stock ends up being bullish prior to earnings being released. So heading into Wednesday close, I'm expecting Nvidia to be a bit bullish. And even after Nvidia has earnings, if it is bullish, the S&P is going to get some love from that. And if Nvidia's earnings are bearish, if the overall market can maintain its bullishness, the money that would get put into the tech stocks and into Nvidia and AI related stocks would funnel out and go into the IWM or the Russell and the other S&P stocks that are not in the tech sector. So regardless, as long as the bullish structure of the S&P maintains itself, it's a win-win for the SPY, in my opinion. So that's number one, okay? Number two is I really like this little bottoming setup on the IWM, okay? So initially, I basically was showing how the IWM came down to this very, very important fib zone here, down here around 181, right? That held as support really, really well. So now what we're seeing on the IWM is a big pullback and the first instances of a bounce. All right. So on the 1 minute time frame, if we were looking at this setup on the 1 minute time frame, never, ever, ever would I ever go short. I would never go short because it is almost an 85, 90% chance that you never go short on the first initial bounce upward after a big drop. Okay, so I'm expecting the IWM to do a bit more bullish bounce. If it doesn't work, it doesn't work. But if the IWM does well here, then it's going to cause the S&P to do well also. And yeah, so I really like this IWM setup as well. It basically needs to, it held 183, right? So 183 is like a really, really major level on the IWM. The fact that that held, very, very bullish, and there's still more room to go. So tomorrow we could have another flat day, whatever. But over the next few days, the longer we can maintain above 183, the higher likelihood we're going to bounce. So I really like this setup on the IWM. That's my second reason. And of course, the most important third reason is, so this is a chart of the S&P 500 on a daily, right? And I really, really love the fact that we held this 437 level here, 437.68 to be exact, right? So, and 438, right? So I really like the fact that we held 438. And I was telling you guys that the first resistance level to the upside would be 441. We obviously opened at that level and failed. The entire day we failed and fell down. But it's a very, very, it's still bullish. The fact that we did not just drop completely, right? If we wanted to drop completely, it would have happened today and we would not have held this 438, right? So by no means am I saying that I'm bullish on the market. Not at all. I'm not saying that the market is going to hit personally, I think the market is going to hit 420 before it comes and retests 460. That's what I think. We're going to end up falling lower before we come higher. But immediately, I think that the SPY, the fact that we held this 437 level, the SPY has room to go to 442, 443. And if that's the case, our 445 calls are going to do pretty well. And if tomorrow and over the next few days, the SPY ends up falling, and if it breaks below 436, 435 area, then that's it. We're going to sell for a loss and look for another position. But the fact that it held 435 yesterday, and the fact that it held 437 and 438 today, means that there's still more juice to the upside. That's purely what it means. And we're playing to the upside here on the SPY. And things can happen overnight, but regardless, it's not the perfect time to go short. One of the best times, in my opinion, it would be a much better opportunity to go short up here at 443, 444 once we get a retest of these levels of resistance. We're not there yet. So yeah, we just keep it simple, going long at support, and hopefully we get a bounce there tomorrow or Thursday, and then we're going to sell at resistance. Okay, nice and simple. So that's my thought process of why I'm bullish. And now I basically want to go over the dollar, and then we can take a look at the bonds, and we'll take it from there. All right. Okay, so this is something I want to show you guys across the board. Okay, so this is the MACD. All right, so the MACD clearly is so the MACD on the dollar is falling, right? But the price of the dollar is rising. So this is very, very bullish on the dollar. I'm not going to say that this is not a bullish move on the dollar. Clearly looks bullish, right? If we break above here on the dollar, then obviously, you know, the market is going to continue falling. We already understand that there's a negative correlation on the market and the dollar. So if the dollar does well, then obviously the market is falling. Okay, this looks very bullish, and the MACD indicator shows extreme strength. Okay, but it's still falling lower, and the price hasn't yet crossed above. But price action wise, taking the indicators out of this, the dollar looks bullish, but we need to break above resistance for us to you know, see a continued move to the downside on the dollar. All right, now basically this is relevant. I'm looking at the MACD. It's relevant because when you look at the MACD indicators on the rest of the indices, they look like they're about to cross above. Okay, so on the SPY, it looks like it's about to cross above, and we know that when it crosses above, the day to 2 days after it crosses above, we should be bullish. We should be neutral to bullish. We should not be bearish, because the overall momentum alongside the MACD is bullish. So according to price action in the way that we trade, we should be neutral to bullish. So we could see that the MACD is about to cross above on the SPY. The MACD already crossed above on the NASDAQ. So that's another reason why I'm bullish, because we see that the MACD is crossed above. So tomorrow we should have another neutral to bullish day on the NASDAQ. And then on the IWM, obviously similar to the SPY, we have not yet crossed above. So if the IWM gets a nice big push to the upside, the MACD indicator is going to cross up above as well, and that's going to cause the SPY to bounce. So this is relevant because the dollar is pointed downwards, but the price action is bullish. So the market is getting to a very, very important decision-making time. And we're going to have to see who wins in terms of the momentum. But, you know, currently the dollar looks very, very strong. It's in a huge uptrend. And the market in the IWM obviously looked very, very weak. And the IWM is relatively here, basically, compared to where the dollar is. So we need to see which works better. But this is relevant to take a look at. So for now, we haven't crossed above yet on the MACD, but the price action is bullish on the dollar. So the more bullish we are on the dollar, the more bearish we are on the market. So let's just see. Okay. Next, the bonds obviously are also very, very important, and they are more correlated to the market. So I was showing how basically I think 117.10 needed to hold yesterday in yesterday's video, I said, and it did, and now we're painting a green candle. We're bouncing a bit off of these lows. We posted a big red candle, made plenty of people bearish, and maybe this could be a bit of a bounce. We've been monitoring how the bonds are in a falling wedge pattern. This is not the best drawing, obviously, but falling wedges are extremely bullish patterns, and if the bonds end up showing a lot of strength above these major levels of resistance, then the fact that these are showing strength, then the overall market can also start to show strength. Okay, so we're in a bit of a fun, honestly, like it's not really as high conviction of trades or swing trades or anything like that, because we're not at extremes. But what we're trying to do right now is play alongside the momentum, and currently in the very, very short term, the momentum on the stock market is bullish, and it makes sense to have a bounce to at least 442, 443, and then get a pullback. That's what I'm expecting. But overall, once we get to these levels here, if we get to 445, 450, once we get to some sort of a good level to go short, because I don't think this is not a good zone to short just yet. I think it would make more sense to short on a leg up. Once we get to that, then all eyes are just going to continue being on the 420 level on the SPY. Things can just continue falling lower, and yeah, we could easily fall to 420 by the end of September, early middle October. 420, we should definitely see 420 before we see 460 on the SPY, and I'm pretty confident about that. But let's see. I don't mind regardless. We're not holding any long-term puts, and let's just see how that plays out. But aside from that, I hope you guys enjoyed the video. I hope everything I said made some sense, and yeah, I will see you guys bright and early tomorrow morning. Hope you guys enjoyed. Have a spectacular, wonderful rest of your day. Thank you. Take care.